Good morning, traders and investors. Welcome to Wealthdown. The week of the 14th till the 18th of July was marked by complex interplays of renewed trade tensions, the start of the earnings season, and ongoing discussions around monetary policy. Now, here's a breakdown of the news and events that influenced the market. So let's first start off with renewed tensions and tariffs. On Monday, July the 14th, President Trump announced sweeping 30% tariffs on goods imported from the European Union and, of course, Mexico. Now, these are set to take off on August the 1st. This followed earlier announcements of tariffs, including 50% tariff on imported copper, which then, of course, set the copper price rocketing high on that announcement. Now, full disclosure, I am shorting copper, but this is getting far too dangerous because copper is in a clear uptrend from here. But everything that goes up also needs to come down. So let's see how this trade works out. Stay subscribed for the news on this event. Now, these news events, of course, with tariffs created investors' caution on trade disruption concerns, particularly for sectors like manufacturing, agriculture, and technology. Now, on Monday, U.S. financial markets opened lower with the Dow Jones Industrial Average and S&P 500 and the NASDAQ Composite Futures all trading downward. The major indices initially slipped at the opening bell. However, throughout the day, stocks showed resilience, with the Dow Jones, S&P 500, and NASDAQ recovering from earlier declines and even pushing the NASDAQ to new all-time highs as investors somewhat brushed aside the tariff concerns in anticipation of earning and inflation data releasing. So midweek, also actually end of the week, the ongoing tariff discussion continued to be a significant factor leading to fluctuations in the market. Now, some reports indicate a demand for a minimum of 15 to 20% tariff in any deal with the EU. But the EU is complex and has many voices. So until that day comes to where they reach an agreement, we just don't know. Now, this kept a degree of uncertainty in the market. So let's go to the next subject, which is earnings season. New earnings season officially kicked off this week with several key companies reporting their second quarter results, like the Fastenal Company, ticker symbol FAST, providing an earlier glimmer of optimism with stronger than expected results. Major US banks, including JPMorgan, exceeded their expectations, and the stock did absolutely nothing. Also, Netflix reported a beat on revenue and earnings estimates, and the stock declined to the high expectations after a significant year-to-date gain. Now, also Charles Schwab reported earnings, and it rose strong results, and also Chevron, ticker symbol CVX, gained after completing a major acquisition. Now, they are still open to report earnings on June the 25th. So I'm going to come back with that report. That's going to be interesting, although they did close lower on Friday. And also the entire sector, if I take a look here on the entire sector of the energy markets, we can see that Exxon and Chevron massively dragging down the sector of energy. Although other ones are in the green, but with Exxon being the biggest loser with 3.48% for the day. Also Chevron, as I said, having here a little bit of a downturn. But we're going to keep an eye on this. We are waiting for a major decline in the energy sector, and then we could see a couple of months of rebounds. Well, that's still open for discussion, and we will see what happens with the energy sector. Now, strong corporate earnings do provide a uplift to the market's sentiment throughout the week. Upbeat earnings surprise contributions to the S&P 500 and NASDAQ hitting new all-time highs, and this was reached throughout the mid of the week, I believe. Take a look here at the S&P, which did close on Friday down. Let's take a look here at the longer term 1-year chart. You can see the S&P did close on Friday on a negative, but it did have a pretty good week, reaching here new all-time high, but closing it in a negative as I did. Now, as long as we remain above this 20-day moving average, I think we are okay. But sentiment is bullish. This could continue on. This could continue on to even newer all-time highs. But if this breaks, be prepared for a pull down to the 50-day moving average. This is where I would say that the 50 is where buyers will step in and buy the dip. Okay, some economic data was also released. On Tuesday, we got the CPI inflation report for June, and it came in line with expectations. Also, we got on Friday housing that starts rebounding. It seems in June, and the preliminary University of Michigan consumer sentiment for July showed rising consumer confidence, and it dropped in 1 year inflation expectations to 4.4%. Low since February, by the way. So inflation, the CPI report on Tuesday helped to stabilize market expectations regarding monetary policy, easing concerns about aggressive rate hikes, while tariff-related policy prices increase were not as intensifying as inflation pressures. So I would say that we are looking good to go for a new all-time high in the markets with such good sentiment. But let's go over to monetary policy. We saw some discussions about the Federal Reserve dynamics, and future interest rate cuts continued, while high inflation from tariffs could encourage the Fed to hold off the cuts. Now, 2 rate cuts are still widely anticipated by the end of the year, although Trump is kind of trying to push Powell to just cut those rates. Too late, Powell. Now, influence on the market, this is very interesting. The monetary policy ambiguity was a underlying factor for the market's behavior. The inline inflation data helped in this regard, and the expectations of potential rate cuts later in the year provide some support for the market. The 10-year Treasury yield remained between 4 and 4.5 range. Inflation data did help for that, but this was reflective of a balance of slower growth and potential Fed easing against inflation concerns. So let's move to our last topic here, the technology and crypto sector. With the tech-heavy NASDAQ continue to just hit all-time highs. It has a really strong performance. Bitcoin remained robust. If you take a look here at the Bitcoin chart, it just had a magnificent day, or a magnificent week, I would say. It started off on the 10th, which was the week before, jumping from the 9th, which was Wednesday, then Tuesday, and then it kind of tried to consolidate here. Now we could see a pullback to the 20-day, maybe a rip, or this is it. This is where Bitcoin will break down and go to what I think the 100-day moving average. But we do need a catalyst for Bitcoin to take a little bit of a breather. And then I would say Bitcoin to 150 to the end of the year. That's my hunch. Now, if this does not happen, then be prepared to buy Bitcoin on a dip, because I do think this is going to go into 2026 with a strong backwind. Okay, so let's go to trades. What trades did I do this week? Let's take a look at July, and it was a weak week. So I started out with Autodesk on the 13th. This was Monday. Let's take a look at Autodesk here. Now, I did get out of the trade right here on Monday, where I did see that this is not working, but it's really trying Autodesk to regain its power and start here maybe a positive trend. So Autodesk pretty much coming out from the lows. I chickened out here. As you can see, on 15 I was right, on the 16 I was right, but the 2 consecutive days of 17 and then closing up on Friday on the 18th, Autodesk was in the positive. So if I would have held this position, I would have gotten out, well, break even maybe, but I did. Let's close this up. Let's close up the chart. I did manage to have a net profit of $91. So this is net, not gross. This is after taxes on that trade. Now, Lockheed Martin also did a little bit of trading here, but thank God I got out of this trade. Lockheed Martin trying to trigger here a sell signal. So I sold this on Monday. This is the 14th. I think this was okay. I could have done better, but it was too late. Now, NVIDIA also did a small trade. Should have held it to the end of the week. Should have held it. I closed it up on Monday. As you can see here, I could have locked in much better results on NVIDIA, only yielding a $16 net on that trade. Now, AMD, this was a really good trade. I did hold AMD for some time, and I'm waiting. I'm really waiting for a pullback here in AMD. AMD had a major run from its low from $79 to $157. This is a doubling in price. So if you bought an AMD down here, I would suggest that you should take some profits. A major run for AMD. Congratulations to all AMD holders. This was right here the time to buy AMD. I'll tell you about it a little back here somewhere. I thought that this was the dip. Of course it was not. So I sold it here because markets are just too oversold, and I'm not risking for this to go down, but I'm waiting for a pullback. You see this has a really nice upsloping trend right here, and if this has a pullback, I'm ready to step in and buy some more AMD. But I also had a couple of negative trades. I think I was too early on this. Yeah, Horton, it's one of the big builders out there. I think this has a major uptrend, but I just chickened out for now. I should let this run, but this pullback right here, I think if this holds, is actually a pretty good point to get back into this trade and ride it to the upside. And if this gets overbought, then take some profit and leave the trade again. So I'm looking forward for DR Horton for moving in once more. Also sold Exxon on a loss. Sadly, $113 loss there. I'm looking at Exxon, and it has a major sell signal here triggered. I thought this is going to rebound. It has earnings. Let me just take a look on expecting earnings report on in 24 days. So this is far out there. Exxon, a magnificent company. Also, as you can see, it had a really good run. So for those long-term holders of Exxon, congratulations to you all. And I am looking to reinvest in this stock once more. So let's close up Exxon here. One less trade, also in the negative, was the financial ETF Spider S&P 500 financials. I did close this up on negative. I think banks are for the short term overbought, and when this has a pullback, I'm going to get back in here. Actually, I messed up here. This should be XLF, the ticker symbol for this ETF. So basically, as you can see, it has a slight downturn here. XLF, there we go. So let's just take a look at its chart. It has a uptrend here, but I'm waiting for a pullback, and then I would love to get back into the financial sector once more. So buy signal, but we are still on a sell signal. So leave this for now. If it's going to confirm that this is a buy trend, then I'm going to get back into that trade. Okay, so that's it for the trades. I'm currently up on the month. Let's see, this is the wrong year. I'm currently up on July with 300. Actually, it should be more, $301. This is not correct. This should have a conversion rate from 116, $20. So this should be, let me just drop out the calculator here. So 277.94 euros times 1.16, $322 up for this month. And the month is not over yet. So maybe that copper trade kicks in the short on copper and going to sell that position and going to report back with much better results. Okay, stay safe out there. I'm NovaPM. Subscribe to the channel. Catch you next time. Bye.